The pandemic has dramatically slowed down economic activity, and as I've covered in previous videos, the rental market is not safe from this. Many tenants have lost their jobs, and many prospective tenants are scared to look for new apartments in the first place. Even though real estate is still considered an essential business in many states, this is not enough to keep it from feeling the effects of the pandemic. And already we're seeing rents drop around the country. Hey everyone, my name is Jack, and in this video I want to take a look at the pandemic's impact on rent prices. If you guys want to see more of this type of content on real estate, the markets, and investing, be sure to hit the like button so I can make more of this content in the future and so other people can see it as well. It would make me very happy. Thank you. And remember, I'm just a guy on YouTube. I'm not giving financial advice, nor do I want to give you financial advice. This is just my take on the current situation, and this is a video for you to simply watch and like, not to sue me over. CoStar recently released a study showing the impact of the pandemic on the daily market rents in Chicago, my home city. I'll include a link to the study in the description. But between March 19th and April 2nd, apartment rents fell 0.32%. Last year, rents saw an increase of 0.44% during that same period. And over the last 5 years, the average increase during March was 0.6%, according to CoStar. Now, you might be a bit confused about why the graph is shaped the way it is. This is actually pretty common in more stable rental markets. Rents will typically rise beginning in the spring, through the summer, and into the early fall months when demand is highest, usually peaking somewhere around July. Many landlords intentionally aim to have their leases end in the summer, since that's when many people tend to move and when other leases tend to end anyways. And that allows for people to move for school and summer programs, among other things. But this system enters a sort of positive feedback loop where most tenants will have their leases expire somewhere between May and August. So the summer is typically considered the busy season in leasing. This isn't to say that there are not apartments available in other months, it's just that typically most apartment leasing is done then, as that's when demand is highest. But back to the data, a 0.32% decrease when we would normally see an increase is actually a scary problem to have. This is especially true for developers. CoStar pointed out that there are almost 12,000 apartment units under construction in Chicago, with many expected to finish their projects this year. Now again, because real estate and construction are essential, according to Illinois and many other states, this construction can continue. But developers heavily rely on market rents in many cases, and they're vulnerable to rent swings like this. Developers risk a lot of time and money in creating new projects, so a low or negative return can be a complete disaster. And this is especially true for smaller developers who might not have the cash to cover all labor costs if a project fails. Either way, this rent decrease affects more than just developers. Landlords are already receiving far less rent due to the pandemic. You can check out my video linked above about how nearly a third of tenants did not pay their rent before April 5th of this month. Now they're struggling to fill vacant units and are having to slash prices to stay competitive with the now lower demand. But maybe this is just a Chicago thing? What about other real estate markets? Well, CoStar is a master of real estate data and should have plenty for everyone. New York has seen a similar dip to Chicago's, though it's been hit significantly harder than most other cities by the crisis. Another one is Houston, which has seen between a 1% and 4% decrease across the board over the last month, depending on which county you're looking at, with East End and North Galveston being hit particularly hard. A 4% decrease in rents can make or break a real estate deal, especially a highly leveraged one. This is definitely the case for those deals that rely on rent appreciation. If you own a break-even rental property and lose 4 or 5% of your revenue as leases expire, assuming you can even re-rent them quickly, which might not be the case now, all of a sudden you're having to come out of pocket each month just to cover costs, and you have a negative return. And then of course you're risking foreclosure and all that nasty stuff. But not every market is doing much worse than before. Oklahoma City, for example, has actually seen slight rent growth in the last week, after previous years of significant growth, though there's no guarantee that that will continue with this crisis. After all of the data comes from a very small time period that may not reflect the trend for the coming month. Things can quickly change in either direction, though the trend towards the negative seems to be happening all over the place. This begs the question, will the rental market bounce back, and if so, when? Of course, no one knows for sure, but I would guess that once the economy opens back up, assuming it's this summer, of course, the rental market would rebound at least a little bit. But many people have lost their income and may need some time to rebuild savings or take care of new debts that they might have had to run up to mitigate the crisis. At this point, opening up the economy would not instantly return things to the way they were. This will take some time to heal. Rents may similarly take a long time to come back up to their previous levels, especially if there's a wave of property foreclosures. Downward pressure on rental prices may continue to grow before we see another price increase. The past 2 weeks of data are not what will dictate the future. The normal busy season for leasing is only just beginning, so this might only be temporary. That said, it might also be comparatively mild for what the rental property market will actually be facing in the near future. I'm not going to mandate that the market will turn on a specific day or another, but I would imagine that once the economy opens back up, we'll at least see a slight rebound. I do doubt that we'll quickly reach the previous highs in most markets because there has been some pretty substantial damage done already. The best thing we can do is to prepare ourselves for the absolute worst. Even so, if you guys want to get some free money to invest with, or maybe make up for lost rent if you're a landlord, or to cover bills if you're falling behind on things, check out my affiliate links in the description below to get yourself 3 free stocks by signing up for Webull and Robinhood. You can sell those stocks right away after getting them and close your accounts. It doesn't make a difference to me. They're free stocks on free brokerages, so you get free money. I got $20 worth of stocks when I opened my Webull account, so you might as well take your shot. You miss 100% of the shots you don't take, which is something someone said on a TV show, I think, so you take that shot. You apparently can get a stock worth up to $1,400 when you open an account on Webull. Let me know what stocks you guys get. Real estate is not safe from this pandemic, so it's very important to follow what's going on in real time. Staying up to date on the data will help you to make better decisions. Whether you want to buy real estate yourself, invest in someone else's project, or if you just want to be a well-informed renter. Next month's data could be very telling for the remainder of the what would be busy rental season. If we see more rent decreases in what is typically a month of increases, it will be harder to assume that a reversal's coming. Of course, a lot can change in a month. Just 6 weeks ago, the financial markets were peaking, and everything in the US was still plugging along normally. Perhaps another 6 weeks will reverse much of that pain that we have gone through as a country. Well, that's all I've got for today. If you like this video, like it, since it helps the channel out a lot. If you want to see more content on real estate investing and other personal finance topics, be sure to subscribe so you don't miss any new updates. I post new videos every single week and wouldn't want you guys to miss out. How do you think the summer rental market will pan out? Definitely let me know in the comments below, but until next time, take care.